watching Market Cafe on ET Now with me Shreyansi Singh, and with me as always is my co-anchor Snehi Shah, and over the next 1 hour we'll be taking you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, Snehi, let's take a look at Wall Street then.
Absolutely. Let's take a look at Wall Street. Hi there, good morning. Let's kickstart the show with the global handover coming in this morning. And first up, let's talk about what the US markets have done yesterday, right? Mixed trading session coming in. S&P 500 futures were near flat last night as investors passed the latest earnings report and readied for the Fed Reserve monetary policy decision coming Wednesday afternoon US time, which means it's going to be late at night for us, and we'll be addressing it first thing tomorrow for you. In extended trading now, Microsoft shares dropped more than 2% as its cloud business disappointed Wall Street. On the flip side, you had Advanced Micro Devices that climbed more than 7% as the second quarter results topped consensus forecasts. AI darling Nvidia climbed more than 5%. Once again, a good rally being seen after that sharp slowdown that we had seen coming in for Nvidia stock. This was on the back of a brokerage note by AMD. Those moves followed a mixed session yesterday as traders continued rotating out of mega cap technology names. The tech-heavy Nasdaq Composite slid 1.3%, so that was the big loser of yesterday's trading session. S&P 500 slipped by 0.5%, led down by IT names, and the blue chip Dow bucked the downtrend, adding 0.5% on the flip side. Let's talk about the small cap index as well. The Russell 2000 continues to outperform the benchmarks, rising about 0.4% as investors continued buying into small caps amid the shift away from major tech names that have led the market higher for almost much of the year. Now, all eyes are also going to be on the Fed Reserve, which wraps up policy meeting with an announcement about interest rates and a subsequent press conference with Chair Jerome Powell. Fed fund futures are pricing in a strong likelihood that central banks will keep rates steady at that 5.25 to 5.5% rate. This is according to the CME's Fed Watch tool. The main focus for traders, however, will be whether Powell offers any signs that cuts may be near on the horizon as well in the run-up to the announcement. This is also important to watch out for because the street is largely penciling in one rate cut beginning for FOMC from the September meeting. So we'll just have to sit back and watch out for any commentary, any indication that Jerome Powell gives about a potential rate cut, and that is going to make streets happy. But if that does not happen, then we might see an adverse reaction coming in on Wall Street as well. Now, traders will also monitor economic data on private payrolls, employment costs, and pending home sales throughout the morning. And on the corporate earnings front, we'll watch out for releases from Boeing before the bell, followed by Abelmal, Qualcomm, Etsy, and Carvana after the market closes. Those could be the final catalyst in a bumpy month for the market. And when you take a look at what the trend has been monthly, the S&P and Nasdaq are tracking to end July down almost 0.5% and 3.3% lower respectively. So Nasdaq seems to be the real loser here. On the flip side, the Dow and the Russell 2000 are slated to finish the month by more than 4% and 9% respectively. Big moves coming in on that small cap index for the US. That underscores the market's rotation boost to stocks that are smaller and more cyclically oriented. This was the handover coming in from the US. Let's quickly switch focus and also take a look at what the European markets did yesterday. Mixed trading session coming as well. You have DAX that's closed 0.5% higher. FTSE has closed lower by 0.2%, and you have Stock 600 up almost 0.5% in yesterday's trade. So that's what the global handover is looking like. Largely mixed, but well, all eyes on the FOMC meeting outcome. But with that, Shreyansi, also take us through what's been happening in the world of crude and gold.
Well, absolutely. So when you take a look at crude, what you're seeing is that it's still extending those losses that we saw in the previous session as well. Over concerns about Chinese demand, and the market also shrugged off the risk of conflict escalating in the Middle East. So that is something that the market is keeping a very close eye on. Let's take a look at price movements then. When you take a look at Brent, you're looking at a decline of about 12 cents coming in, or about 0.2% there. Brent was around those $79 a barrel levels. When you take a look at US crude futures as well, you're looking at a downtick of about 14 cents there as well. So a downtick of about 0.2% there as well, around those $75 a barrel levels is where that contract was at. Now, when you take a look at what else is playing out in the market, then a raft of disappointing economic news out of China has shaken markets recently. So that is something that we've seen that's been quite the concern. China's manufacturing activity likely shrank for a third month in July as well, and that is really what reports were saying. Also on Monday, Citi cut China's growth forecast to 4.8% from 5% after its growth missed analyst estimates in the second quarter, noting that economic activity also softened further in July as well. The market is also watching an upcoming meeting of China's top decision-making body, the Politburo, expected to take place this week, and that could elicit further economic policy support as well. But expectations are largely limited after the third plenum, a key policy meeting in mid-July, largely also reiterated existing economic policy goals as well as failed to lift market sentiment overall. So that is the kind of expectation that we have after that third plenum when it comes to this one. But then oil fell 2% in the previous trading session, and we're seeing a host of trends play out. But yesterday's move, day before's move rather, was after Israel signaled that its response to a Hezbollah rocket strike in Israeli-occupied Golan Heights on Saturday would be calculated to avoid dragging the Middle East into an all-out war. So that really is the kind of commentary that we had and the kind of factors that we were looking at all through this week. When you take a look at gold prices, then let's switch focus to gold prices. Gold prices gained around 1% as investors remain optimistic that the US Federal Reserve could drop clues about lowering interest rates in September at the end of the policy meeting this week as well. So when you take a look at price movements for that one, you're looking at an uptick coming in of about 0.8% thereabout. And gold was around those $2,400 per ounce level. So that is the kind of handover swing that we saw for oil as well as gold.
Absolutely. With that, let's also take a look at all the important cues to watch out for in tomorrow's trading session. First up, from India today, fiscal deficit data is expected, so watch out for that. From the US, like we mentioned, the Fed interest rate decision later today, late night for us. It's also the last date to file your income tax returns. Well, it's that dreaded day of the year, it's 31st July. So if you still haven't done it, you still have a few more hours to do it, so get right to it. In terms of global earnings, you have Meta, Qualcomm, MasterCard also coming out with their numbers today. And talking about earnings back home from the Nifty front, you have 4 companies, out of which 2 auto majors, Maruti Suzuki and M&M. Both will be coming out with their numbers. You also have Tata Steel as well as Coal India coming out with its numbers today. So watch out for all of that. In terms of other companies coming out with their numbers from the broader markets, a whole host of companies there as well. You have Adani Power, you have Asahi India, Aster DM, Bank of Baroda, you have JBM Auto, KPR Mill, TCNS, Sundaram Faster, Prestige Estates, Saturn Credit Care. Lots of companies coming out with their numbers. So watch out for that as well. On the corporate action front, then the stock of rights will be in focus today because that board is going to be mulling a bonus issue today. So we'll be sitting tight and waiting for that announcement to trickle in today. It's also the last day to buy shares of rights, DLF, Kamdhenu, SRF, Chrysler as well as EIH Limited to be eligible for their dividend. And well, in terms of other news, NCLAT or the NCLAT is going to be hearing Baiju's case today. So we'll be watching out for what develops on that front as well. But well, yes, these are all the cues that you should be closely watching out for in today's trading session.
Well, absolutely. And on that note, all eyes will definitely be on the Federal Reserve meet outcome tonight, and expectations are that interest rates will remain unchanged, stuck in the same range of 5.25 to 5.5%. However, the Fed could hint at a possible rate cut in September as well. And that is really what is being penciled in. Market predictions suggest a 100% chance of a rate reduction at the September meeting, which will be important to watch in an election year as well.
Alright, with that, let's also shift focus to China. Take a look at what Japan is up to because Nikkei as of now more than 300 points lower in trade. Japan's industrial production unexpectedly fell 3.6% in June despite forecasts of a 4.8% drop, marking the 4th contraction this year. Output declined in key sectors like motor vehicles, production machinery and general purpose machinery as well. However, retail sales defied expectations, growing 3.7% year-on-year in June, the 27th consecutive month of expansion, driven by rising wages and increased sales in machinery, department stores, as well as personal goods.
Alright, then let's move on and take a look at Microsoft. Then Microsoft's latest earnings report has sent mixed signals. While the tech giant beat expectations with a 15% revenue jump and a profit of more than $22 billion, its cloud computing arm Azure fell short of forecast. This weighed on the stock after market hours as well. However, the company remains optimistic and predicts accelerated growth in cloud in the first half of 2025.
And let's keep it going with earnings because Samsung's second quarter earnings have beat expectations yet again. The electronics giant's revenue has jumped 23% to more than $53 billion, while operating profits soared almost 1,500%. That's a very big jump coming there. And you may ask the driving force behind this surge. It's a strong demand for advanced memory chips, with forecasts predicting continued profit growth until 2025.
Alright then, and in more earnings reports on Wall Street, AMD and Starbucks reported contrasting numbers. AMD beat expectations with data center sales up 100% and AI chip sales over $1 billion, sending shares up 8%. In contrast, you did have Starbucks that missed revenue estimates, with same-store sales declining for the second quarter. Despite this, Starbucks sees positive signs, including new product success and the upcoming return of pumpkin spice drinks.
Well, and CrowdStrike shares plummeted about 10% to their lowest level this year after Delta Airlines hired a top attorney to seek damages. The move comes after a software update from CrowdStrike caused a historic outage of Microsoft systems last week, leading to nearly 7,000 flight cancellations and an estimated loss for the airline of about $350 to $500 million. CrowdStrike's value has now dropped by a third since the incident. No lawsuit has been filed yet, but the investigation is underway.
Moving on then, Intel plans to cut thousands of jobs to reduce costs and fuel a major turnaround. According to news reports, the company, which employs more than 1 lakh people, aims to recover from declining earnings as well as market share losses. The company is investing in R&D to enhance Intel's technology and reclaim its leading position in the semiconductor industry as well. And the job cuts expected to be announced this week come ahead of Intel's second quarter earnings report as well.
All right. With that, let's shift focus back home, take it across to politics because post-budget showdown continues in the parliament. After Rahul Gandhi's fiery speech, Finance Minister Nirmala Sitharaman came out with a scathing point-by-point rebuttal, empathetically stating that the government didn't discriminate between BJP and non-BJP states and Congress is only politicking. She called the opposition over a motivated and misleading campaign, and FM Sitharaman, who presented her 7th consecutive budget this year, also slammed the opposition, stating that entrepreneurs are building India, yet a conspiracy is being spread against wealth creators. An image is being created that foreign investment is not safe in Indian institutions. Together we must fight this conspiracy, is what she had to say. Let's also go across and listen in to what she said on entrepreneurship as well as budget allocation.
Entrepreneurship itself is being made a villain, sir, which is a shame. Hard-working entrepreneurs are building this country. The conspiracy is to end India's entrepreneurship culture, even if before it fully blooms, and thereby hitting at the Indian core backbone, which is the entrepreneurship, small and medium units, and enterprise is what is building India. Negativity is being spread in society towards all those who do business. And this hatred for business and wealth creators is spilling everywhere. There is a conspiracy to send a message to the entire world that India is not safe for investors. Nowhere has the budget given lesser allocation than the previous year. So I would want to appeal to honorable members to please have a look at the document in full and see that no allocation has been reduced.
Alright, there you have it. So that was the word coming in from the Finance Minister. But it's time to take a quick break. When we come back, we'll take a look at how the Asian markets are faring, so you don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then. And what really is in focus is the Bank of Japan's rate decision that is being awaited, as well as China's business activity data. Let's also take a look at the kind of expectations that we have while we take a look at Japan's Nikkei on your screens. Downtick of about 0.8% coming in for that one. And the kind of expectations that we really have is that economists are expecting the bank to raise rates to 0.1%, and that's the kind of hike that is currently being penciled in. And should the bank raise rates, this will mark the first time since 2010 that its benchmark interest rates stand firmly at 0.1% or higher. So that really is the kind of expectation that we have there. And Japan's Nikkei on your screens, downtick of about 0.8% coming in ahead of that BOJ decision, bearing some losses as well. And the country's retail sales also climbed 3.7% on a year-on-year basis in June, and that is the kind of data set that we're looking at as well for Japan. Let's also shift focus to Australia then. Australia's second quarter inflation numbers are also in focus for clues on the Reserve Bank of Australia's moves at its next monetary policy meeting on August 6th as well. Australia's ASX 200 on your screens, uptick of over 1% coming in for that one as well. Let's move on, take a look at KOSPI then, and KOSPI is also in the green. You did have heavyweight Samsung Electronics that was up about 0.7% as the firm reported a whopping year-on-year rise in second quarter operating profit as well. And currently, KOSPI on your screens not doing all that much, but still 0.2% uptick coming in for that one as well. Let's also take a quick look at Hong Kong's Hang Seng Index then and see what that one is up to. Hang Seng as well as Shanghai. First, let's take a look at Hang Seng on your screens. Uptick of about 0.6% coming in for that one as well. And when we take a look at Shanghai as well, it's also in the green, and currently it's up about 0.5% or 0.5% thereabout. So that's the kind of handover that you have this morning. Nikkei is the one leading losses at this point, and you have some strength in the other markets at this point. Now back home, of course, we shut shop around the 24,850 levels, and currently what we're penciling in is a rather subdued start, not much of an uptick that we're looking at in terms of points, at least on a spot basis and even on a futures basis. And with that mixed handover that we have, it will be very important to see how that really pans out for us, Nehi.
Absolutely, very important to see how today's trade pans out for us. It's a roughly 80-point uptick on the spot basis. But, well, yes, it's been 2 trading days where we've gotten very close to 25,000 but not managed to touch it. All eyes on Nikkei on the back of the policy decision like Shanzi mentioned. But with that...
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at some more news and updates. Then SEBI has released a consultation paper on steps to increase investor protection in derivative markets. My colleague Ankur Mishra is joining in with more details. Ankur?
Yes, SEBI has released consultation paper on FNO, and the idea is investor protection as well as market stability. One of the suggestions which has been given is to increase the contract size and the minimum size can be between 15 to 20 lakhs as per suggestion. Currently that lot starts from rupees 5 lakh, and in the second phase, that is after 6 months of the implementation of phase 1, the contract size, the lot size can be increased to rupees 20 to 30 lakh. Apart from that, there are also few of the suggestions which has been given, especially for weekly expiry contract. The suggestion is that weekly options contract should be provided on single benchmark index of an exchange. There is also a suggestion that not more than 50 strikes to be introduced for an index derivative contract at the time of contract launch. And there is also often seen that since the expiry approaches, the margin is triggered sometimes for buyers. So this time there is a concept of ELM, that is extreme loss margin, which can be introduced. Now for this, before the day of the expiry, the ELM can be levied at 3%, and at the start of the expiry day, ELM, that is extreme loss margin, to be increased to 5% on the expiry day. So all these suggestions has been given keeping a retail investor in mind. This consultation paper was in works for long, and finally now it is up for suggestions of the stakeholders.
Alright, Ankur, thanks so much for taking us through all the details about that SEBI consultation paper coming in. But let's also go across and listen to what Rajesh Baheti of Cross Seas Capital Services and Ajay Bagga, market expert, had to say on this.
It will directly hit the lowest rung of retail, enable only people with more money to trade in the markets, and the brokers will also be more careful, because when the lot sizes are bigger, they'll have to be careful as to who they onboard for the F&O segment, because the profits and losses can get bigger. So that will be the most effective measure. Where I have the biggest problem with this thing is the guideline where it proposes one expiry per exchange. Rather than making it one expiry per exchange where the NSE has to effectively choose between the bank Nifty and the Nifty, they might have or they might be better served if they make it one weekly expiry day per exchange.
Intent is good in terms of what SEBI is shooting for. What it does is, with the lot size increase, I don't agree with it, but I think it's going to happen now, so might as well fall in line. What it will do is it will remove a huge portion of very small traders from the market and who were probably making losses because you need some amount of capital and staying power to be in this F&O market. So that is a welcome move. It will reduce the access to a lot of small traders. The issue that I foresee, one, as you reduce volumes because of this, the genuine hedging will also become more expensive and it will not find volumes. So what will happen is the small trader will move to the cash stocks, the penny stocks on a day-to-day basis, while the F&O market will see volumes going down. So genuine hedging as well will become more expensive and will be more difficult to execute. That is one issue. So you are making the market more shallow.
Alright, there you have it. So that's the word coming in from the experts. Let's move on then. RBI has issued new guidelines for banks and NBFCs to address willful defaulters. The central bank has also mandated that banks and NBFCs scrutinize all NP accounts with outstanding dues of 25 lakh rupees and above for signs of willful default. My colleague Ankur Mishra is joining in again with all of those important details. Ankur, take us through all of the key takeaways of these new guidelines then.
Yes, Reserve Bank of India has released comprehensive guidelines on willful defaulters. The guidelines were there earlier also, but there were few grey areas which Reserve Bank has now addressed. One of them is the definition of willful defaulters. Now, Reserve Bank of India has clearly given a threshold of rupees 25 lakh or above, and after that, anybody who's willfully not paying up to banks or NBFCs or any other financial institution, the bank or the financial institution can tag him as a willful defaulter. Apart from that, a guarantor is also liable to be tagged as willful defaulter as per the definition which has been given by Reserve Bank of India, the latest comprehensive guideline. Now, this guideline covers not only banks, NBFCs, ARCs, but all the entities which are associated with Reserve Bank of India, and this classification will ease out the job of the financial institution to tag someone a willful defaulter. Now, as far as the examination by the lender is concerned, it has been clearly given that the lender shall examine the willful defaulter in all NPA accounts with an outstanding limit of 25 lakhs. So all in all, the definition is now clear. Now the onus will be there on the financial institutions to tag willful defaulter if the need arises.
Alright, Ankur, once again, thanks so much for joining us and breaking out all of those details for us. But while speaking on contamination in the market, you had SEBI chairperson Madhvi Puri Buchi was addressing a speech yesterday. She called out Paytm in her address. Let's go across and listen in to understand what she said about the company.
This we have said we will not allow a Paytm type of contamination in our market. Okay, so we all saw what happened in Paytm. Now, because in the banking system there is no KRA type system, so a problem of Paytm stays in Paytm. It doesn't contaminate other banks. But if we allow Paytm to come into our system and then no KRA and then it contaminates the whole system, how can we allow that? So we cannot allow that. So we will always have our KRA sitting in the middle to make sure that things are validated. Otherwise, you can have any one mischievous player coming and contaminating the whole system. We will not allow that.
Alright, there you have it. So that was the word coming in from SEBI chairperson. But let's move on and take a look at some more important commentary coming in then. A post-budget conference organized by the Confederation of Indian Industry or CII wrapped up at Vigyan Bhavan in New Delhi. With PM Modi in attendance, the conference aimed at charting the roadmap of government's larger vision of Viksit Bharat as well. Industry's role in achieving this goal was at the center of this conference too. and it was attended by more than 1,000 participants from industry, government, the diplomatic community, as well as think tanks. Here's what we got from the event. Take a look at some of the important commentary coming in from there.
The private capex is scaling up, it is happening, and our internal surveys in CII also very much indicate that the mood is very optimistic, and there are clear indications that given capacity utilizations, more investments will be forthcoming.
It is clear for a country like India to grow manufacturing, we will have to grow manufacturing where India already has a leadership position. Where we are lagging, we need to fix those, and those that have a multiplier effect on the economy and job creation.
We have a long way to go, but he's given the message to say, you as an industry should work with me and put money more in the industry. So I think the private sector is going to come forward to put more money in the capex.
We are fully committed. I'm in a business of two sides. One is the natural resources, oil and gas, zinc. Anything what we produce is in short supply. And we have so much of availability in India. I want more and more people to come. And I have no doubt the consumption, the way double digit in India growing, and young population, it will happen.
Initiatives on the skilling, upskilling, and also all the incentive schemes to create employment, and I think they are all very, very positive strokes or positive push to the entire system. So therefore, I think this will lead us. This is one of the first steps towards the Viksit Bharat.
Jobs has always been an issue in India, which I think the internship, the retraining, the use of technology, all this is going to play a much bigger role. So I think while we get education right, while we get training right, it'll be up to industry that is creating world-class companies are going to need people. We're also going to need people for the world. And I think that India is best positioned.
These policies kind of build up on what is already available. It is not just job creation, but it's also entrepreneurship. So both of them have to come together. That needs to be led at the bottom, at the beginning level with skills development, and at the top through funding support and higher research.
We should all be part of the government's new schemes. Example, they want us to get interns, let us get them. They want us to invest in the agriculture sector, especially in the rural areas, let us do so. They want to be part of food processing, what I call textiles, toys, employment generation industries, let us do so.
Alright, that was the Top Voices of India Inc. sharing their views at the CII event. But on that note, we'll slip into a short break on this edition of Market Cafe. We'll be right back with more stock-specific news and updates on the other side, so you stay tuned. Hi there, welcome back. You're still watching Market Cafe on ET Now. Thanks so much for staying tuned with us. Let's take it across to my colleague Jinay now, who's joining up with a list of all the stocks that could be potential buzzers in today's trading session, either on the back of their earnings or some new specific stock-specific updates coming in. Jinay, good morning. Take it away.
Well, it's good morning. Thanks. So let's start up with earnings. We have a good set of numbers reporting by Dixon Technologies. Revenue was seen up about 101%, whereas the PET jumped about 108%, reporting at 140 crores. Moving on, V2 retail revenue saw a jump of about 56%, whereas PET saw a insignificant jump of 163%, reporting at 16.3 crores. Moving on, GAIL reported its Q2 numbers. Revenues were seen up about 4%, whereas EBITDA jumped about 26%. Last up, Macrotech Developers revenue from operations jumped about 76%, whereas PET saw a significant jump of 167% to 475 crores. Moving on, if you look at weak side, then RR Cable reported a weak side of numbers. PET was seen down about 13%, whereas Aegis Logistics, the revenue was seen about 24% declining. Moving on, keep your eyes on Mahindra Financial Services. The company has approved issuance of NCDs worth about 250 crores with the green shoe options of not exceeding about 1,250 crores. Also, we have Jindal Stainless. The company has approved raising of funds. They will be raising funds amount for not exceeding about 5,000 crores.
Thanks, Jinay, for that roundup coming in. So there you have it. Those are the stocks that you should keep on your radar. Let's also go across to my colleague Gaurav, who's standing by with a snapshot of what the brokerages are saying bright and early this morning. Gaurav?
Well, yes. Let's begin with Angel One because this is coming on the back of the SEBI's draft guidelines. And now Investec, while maintaining buy rating, has cut the target price for Angel One to 2,500 rupees. What they believe is that the derivative impact is going to be around 30% of the entire volumes for Angel One. And in the base case scenario, this impact could go below 50%. What they believe is that weekly option is going to have a huge impact on the company and expect stock to remain weak until the clarity comes from SEBI. And that is why they are actually cutting the target price to 2,500 rupees for Angel One. Next, let's talk about Dixon Tech because Goldman Sachs has now maintained sell rating but hiked the target price to 6,740 rupees. What they believe is that mobile ramp up is actually strong for the company, but if you look at the cash flow, that is weak for the company, and that is one of the concerns where they are a little bearish on the company. The commentary has come out positive for the higher volumes in the coming quarters, but once again, they are actually building in a scenario where they are seeing some kind of low margins for the business, and that is why they are maintaining sell rating on this company. Next, let's talk about GAIL because Citi has now maintained buy rating and a target price of 250 rupees, and this is on the strong update that we have seen in the Q1 of the company. They believe that transmission and trading actually was a strong beat in this company. Gas transmission again remains strong in terms of volumes as well as in terms of margins. Gas trading also shown some kind of solid quarter in this Q1 FY25. And lastly, let's also watch out for Star Health because Investec has now maintained sell rating and a target price of 580 rupees, and this is on the back of the weak results that we saw. Combined ratio actually increased almost to 99%, and now Investec has also quoted that they have actually lost the market a little bit, and that is why they have maintained sell rating with a target price of 580 rupees. So on the back of the brokerages, we will be watching out on all these counters and see how they perform in a day-to-day.
Right, there you have it, all the stocks in focus on the back of brokerage notes this morning. Thanks, Gaurav, for joining us with a detailed roundup of all of that. But, well, today, last trading day for the month of July, and tomorrow, as we move into a new month, let's take stock of how markets have fared in August over the last 10 years. We'll talk about indices, stocks and sectors, a comprehensive analysis of all of that. Let's take it across to my colleague Ashesha, who will put a lot of things into perspective for us. Ashesha.
Well, yes, first up, let's talk about the index performance where Nifty has given an average return of about 1.1% over the last 10 years and closed in the green in 6 out of the last 10 years. Meanwhile, Nifty Mid-Cap Index has given an average return of about 2.4% and closed in the green in 7 out of the last 10 years. Let's also talk about individual sectoral performance then, and in the top 5 best performing sectors of the last 10 years, at the top of that list, we have Nifty IT Index, which has given an average return of about 2.4%, followed by Nifty Auto with an average return of 2.1%. We have Nifty Pharma, Nifty FMCG and Nifty Private Bank Index, which have given an average return of 1.4 to 2% over the last 10 years. Let's also talk about the only 2 sectoral indices which have given negative returns. It includes a Nifty Real Estate Index, which has given a negative return of 1.9%, and Nifty PSU Banking Index, which has given a negative return of 0.8%. Remember, these are the only 2 sectoral indices which have given an average negative return over the last 10 years. Nifty Realty is also that index which closed in the red on 7 out of the last 10 occasions, and Nifty FMCG and Nifty Energy closed in the green in last 7 out of the last 10 occasions. Meanwhile, let's also talk about some individual stock movers from the futures and options space, and stocks which closed in the green on 9 or more occasions include Trent with an average return of 10%, followed by IRCTC, Polycab, LTTS and SRF, which have given an average return of 7.6 to 8.8%. Let's also talk about the losers then. Stocks which closed in the red in 7 or more occasions includes Balrampur Chini, which has given an average return of negative 4.3%, followed by Motherson Sumi and MCX, which have given negative returns of about 2 to 3%.
Alright, thanks Ashesha for that update coming in. Then switching gears to Motown, then Maruti and M&M are all set to report quarterly results. Street will be eyeing the impact on their sales post that UP government announcement on the tax waiver for Maruti. Meanwhile, when you take a look at commentary on M&M's tractor demand and new launches, that will remain in focus. Let's go across to my colleague Srishti, who's standing by to understand what really the street is penciling in. Srishti?
Well, certainly. Firstly, let's have a look at Maruti Suzuki. This time we are expecting a decent set of numbers. The margins can also see an improvement, but that will be on a YY basis. 12% is what we are expecting. As well as if you look at the volumes, though there has been a jump of 5% on a YY basis, there has been a 11% decline on a quarter-on-quarter basis. So we can actually assume similar kind of an impact on the revenue if we compare it on a sequential as well as on a YY basis. The revenues is expected at 34,770 crores. EBITDA estimate is at around 4,160 crores, and indeed the margin is key to watch out for. 12% is what we are expecting, and lastly on the bottom line, 3,467 crores is our expectation. But indeed, apart from the numbers, we'll be watching out for the management commentary on the demand and the volume outlook, because a couple of concerns that in the second half there could be some slowdown because on the passenger vehicle sales, how the inventory is lined up right now, and most importantly, after the tax waiver in the state of UP, how the sales of Maruti Suzuki for their hybrids have inched up. We'll be watching out for that. And quickly, let's have a look at M&M as well. This time we are expecting a good set because the mix is quite supportive. The auto volumes have inched up 14%, tractor volumes also up around 6%. And the revenue is expected to see a jump of 17% on a YY basis. The margins are also expected to see an improvement, and close to 14% is what we are expecting. That will be on the back of operating leverage, as well as finally the tractors have seen a good momentum. Profit figure is expected at 6,445 crores. But on the management commentary, the 15th August launch of the new Thar is something. More commentaries on that, we'll be watching out for that. So all excitement for these two auto majors. Back to you.
Alright, so two auto majors on the Nifty front coming out with its numbers. But let's take a look at the third Nifty company coming out with its numbers today, and that's Coal India. Expected to come out with Q1 earnings. Revenue and net profit are expected to decline on a sequential basis. Ashesha is back with us with all the expectations that the street is penciling in. Ashesha.
Well, yes, we are expecting muted set from Coal India this time around. Lower volumes and lower e-auction premiums are expected to impact numbers on a sequential basis. Consolidated revenue for Coal India could come in at about 35,750 odd crores, which will be a decline of 4% sequentially. Margins, meanwhile, could come in at 27.5% versus 30.3% that the company had reported in the previous quarter. As I mentioned, lower volumes and lower e-auction premiums are expected to impact numbers. Lower e-auction premiums were at about 66% in the previous quarter, which are expected to decline to 60% in the first quarter of FY25. Meanwhile, share of e-auction volumes is expected to rise from 11% in the previous quarter to 13% in the current quarter. Management commentary with respect to guidance for the full year, guidance on e-auction prices, e-auction premiums and e-auction volumes will be crucial. But all in all, muted set of numbers expected. Lower volumes and lower e-auction premiums are expected to impact numbers.
Alright, thanks Ashesha. But while you're with us, tell us about Tata Steel as well, because that is also all set to release its Q1 earnings, and lower volumes are expected to impact the numbers on a sequential basis. So tell us what the street is penciling in there as well.
Yes, we are expecting muted set of numbers from Tata Steel this time around. Lower consolidated volumes are expected to impact numbers, but EBITDA per ton loss for European operations is expected to narrow on a sequential basis, and that will be a positive this time. As far as numbers are concerned, consolidated revenues are expected to largely remain steady on a sequential basis, but margins could contract to 10.8% versus 11.2% that the company had reported in the previous quarter. As I mentioned, consolidated volumes will be on the lower side on a sequential basis, and this will be mainly on account of India operations, especially after a seasonally strong Q4 that the company had reported. As far as India operations are concerned, EBITDA per ton is expected to decline by about 8% on a quarter-on-quarter basis. Steel prices were largely steady, and coking coal prices were on a declining trend, which will partially offset the impact of lower volumes in the quarter gone by. As far as European operations are concerned, spreads are expected to narrow, so the company had reported losses of about $39 per ton in the previous quarter, which will narrow to $30 per ton in the first quarter. Commentary on capex, on expansion plans, and especially commentary on European operations and UK transition will be crucial. But all in all, muted set of numbers expected from Tata Steel this time.
All right, muted set of numbers expected from Tata Steel. That's the roundup on everything that you need to be watching out for in terms of the Nifty earnings, the 4 Nifty companies coming out with their numbers today. But on that note, I'm afraid we're completely timed out on this edition of Market Cafe. But while we bid you goodbye, you stay tuned because the market takes all the action forward. It's a goodbye from Shreyansi, me, and the entire team that put this show together.